which means the income is not going to be as high as if you were to. We'll give you that times 10. It's that simple. It's proportionate. We'll look at everything, and so because of that, we get a higher payout. Hey there, welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson, and today we're going to be talking about how much will a $100,000 annuity pay you. So I created a video about this a couple of years ago, and I wanted to update you on the rates right now because they're pretty good. And $100,000 will give you a decent amount of income, and it pays a decent amount of interest if you're looking for a fixed rate annuity as well. So I'm going to show you what's available, and we'll look at a different scenario. So whether it's a single or a joint payout, we'll look at everything, and at least that'll kind of arm you with some knowledge. So if you are looking for an annuity, then you can reach out, and I'd be happy to help you with that. So if you want to book a call, there is a link below this video. It goes directly to my calendar, and we'll get on a Zoom call and talk about all things annuities. And of course, if you want to go check out my annuity calculators on my website, go to johnstevenson.com and select the income rider. That usually gives you the highest payout. Although the SPIAs and DIAs are okay too. It just depends on what you're looking for. So anyways, let's take a look. So we've got $100,000, Michigan, and it doesn't really matter the state. Most of the states are the income's the same. So it does change though, depending on your age. So in this instance, this person is 62 years old. They want to start immediate income, and I'm talking like next month. Okay. So if you do that, you don't really give the insurance company enough time to grow it, which means the income is not going to be as high as if you were to defer it. Okay. So if we look at all the payouts, this is the annual payouts. Okay, 67.65 is the highest one with Prudential, followed by Gillico and Corbridge and F&G and Allianz, and there's a ton of options. So if you're looking for the highest though, Prudential's great, and they're A+. So you look at that and say, all right, well, $6,700, how much is that monthly? And again, this is joint. So it's gonna be a little bit lower because they're on the hook for two lives. It's $564. So, okay, well, $564. The easy way for figuring out your income is if you know what $100,000 will give you, I'll just tell you $1 million will give you that times 10. It's that simple. It's proportionate. So let's go here and we'll look at the annual amount again. But now I want to just defer it for a year. Same 100,000, same couple, but now they're taking it at 63. Now it's pretty good. I mean, it's 7,400, so it's definitely increased. And you notice Prudential is not the highest one at that point. So if you're looking to defer it, then probably Corbridge or Delaware would be the best option for that. Now, let's say you're thinking, well, I'm going to take my Medicare at 65. I'm going to retire at that age, so that's when I'm going to do it. Okay. Well, looking at that, now it's $8,900. And clearly Corbridge is beating everyone out, followed by Nationwide, F&G, Delaware, and Prudential's way down here. So Prudential's still good, but they're not the highest payout if you defer it out that long. Okay. So if you're thinking, well, I want to take Social Security at 67, and I want to take my annuity payout at that time, then you can do that as well. And of course, it's higher at that point. So $10,000, that's still pretty good. So you're looking at that and say, okay, well, 10 grand a year guaranteed for my life and my spouse's life. What if I take that out for 30 years? Or what if I don't, but then my spouse does? Okay, either way, it's guaranteed for both of your lives. So if you look at that and say, okay, what does that look like? That's like 300 grand. Very simple, $300,000 over 30 years. If you live longer, you take out more. So it's very simple. It's a lifetime income contract, and you allowed it to grow for 5 years, which means that benefit base is now worth $142,000 guaranteed. It's multiplied by a 7.3% withdrawal rate, giving you $10,403 guaranteed for the rest of your life. So, and your spouse's life. Okay, so that's really important. Now, let's compare a single payout. Okay, so single payout, let's say you're a male. Males don't live as long, right, statistically, and so because of that, we get a higher payout. Okay, so $11,000, a little bit higher. Let's go down to a single payout at immediate, 73. So Prudential is still the highest for that. Sometimes, that there's different companies that are better for single versus joint, but for Prudential, they give the highest single and the highest joint. So that's good. So you could buy one contract and then decide, well, I don't know if I'm going to turn on single or joint. And if you change your mind, then it doesn't matter that you can pick one or the other. So it's really nice with income riders. They're flexible, and you don't have to choose right from the beginning. Unless it's immediate income, then of course you choose whether it's a single or a joint. So otherwise, you can let that thing grow. I mean, even if you let it grow, let's say you let it grow to 70 years old. You're going to maximize your Social Security payout, and you're going to take income in 8 years. Then it's like $14,693. That's pretty good. You see ClearSpring's the highest one for that. Now, that is just for a single payout. Now, if I go back to joint, again, it's going to be less. And now it's like $13,000. That's not too bad. It's like $1,000 less a year. So that's not too bad. So the difference is the withdrawal rate is just a little bit lower with a joint versus a single payout. So that, I mean, if you were thinking, well, I want to put $1 million in, well, then just times that by 10. It's going to be $132,000 a year guaranteed income for the rest of your life. It's that simple. So, and that's great. I mean, especially for you high earners, or if you have a decent portfolio and you want to put a substantial amount into an annuity contract, it's great. You can provide a lot of lifetime income for yourself. So let's look at something else. I'm going to go, now again, income riders. I love the income riders because they usually will pay out the most. Okay, so let's just compare this one more time. We've got $6,500 joint, okay, at 62. And then in 5 years, we've got 10,000. Okay. Now, let's go to the SPIA calculator. Okay. Well, I want to look at the same thing. Now, these contracts are irrevocable. Okay. They're irrevocable. They do not have cash value. Once you pick the date, you cannot change it. Okay. But I just want to do the same 100,000, see exactly what this looks like. And then I'm going to take immediate income. See what that looks like. So $539, that's not too bad. So $539, that's with a theme. So $539 times 12, $64.68. So it's just slightly below Prudential. So if you're getting a little bit more from Prudential, but not a lot more. So, but still, it's a little bit more than this one. So this is not bad. Some people will wonder, well, why would I ever get this? Well, there are reasons to get these. Like for instance, let's say you wanted to do a 30-year period certain. Okay, you want to do still a joint life, but if both you and your spouse die before the end of that 30 years, you still want the income to continue to a beneficiary of your choice. You can do that, and you can do it with a SPIA contract. So we'll look at that and say, okay, well, does that reduce my income very much? Not much. Massachusetts Mutual pays you what? $523 times 12, $62.76 a year, guaranteed for the rest of your life and your spouse's life. Or if you both die before 30 years have passed, that income will continue to your beneficiary. So that's really nice. Okay, so now let's go back and say, all right, well, again, I want to do a straight comparison between this and the income rider, because the income rider will also refund whatever is left in the account balance if you die early. So we'll look at that and say, okay, we still want a joint payout. We don't need a 30-year certain. We're just going to do straight comparisons. We'll say highest income, joint payout, but we still want a cash refund if something happens to us. So we'll say 2030. And there you go. $751 per month. So $751 times 12. It's $9,000. So if you remember from the other example, the income rider pays $10,000. So you're missing out on $1,000 per month in income. So that's, I mean, again, it's the same as the income rider as far as giving the same joint lifetime income, same age, you're waited 5 years. And if something happens to both of you before the money runs out, the amount is refunded to your beneficiaries. So with the income rider though, you're being charged a fee, and that's being deducted from the account balance, but you're also earning as well, whatever the index earns. So in my opinion, if you're looking for highest income, I would choose the income rider. That's totally up to you though. But if you want to check out my calculators, go on my website at johnstevenson.com. You can check out the SPIA, the DIAs, you can check out the income riders, and you'll see for yourself. I'd be happy to help. If you got questions about these, if you were thinking I'd like to buy an annuity, then absolutely book a call. There is a link on my website, johnstevenson.com, to do that, or you can click the link right below this video and you can get on a Zoom call with me, whatever time that you choose. So anyways, hope that helps. I appreciate you. If you do like the video, make sure you like, subscribe, share, comment below. I'd be happy to answer your questions, and we'll see you next time. Hey, I really appreciate you watching the video today. If any of it makes sense to you, or if you found value, or if you even got a question about anything, I hope that you'll go to the comments section and ask it. There's no stupid question, and I'm looking forward to hearing from you.